It's about that time of day again. Welcome back to Nightly Newsletter, boys and girls. Joseph James here. It's Monday evening, August 1st, 2016. Got some great strong trends today, as well as some choppy ranges heading into Tuesday's session. Crude oil, S&P, and Euro are bearish, while gold is bullish, but teetering on the range-bound side as we crack open the first week of the month of August. I have another great newsletter for you guys and gals tonight. Plenty of reliable trading opportunities setting up for tomorrow. But before we jump into our charts and start putting together a strategy for tomorrow, I want to remind you the only place to watch the full-length version of this newsletter is here on our blog at sidewaysmarkets.com. If you're watching the video right now on our YouTube channel, not to worry. There's a link in the description of the YouTube video. Follow that link. Come over here and join me on the blog at sidewaysmarkets.com for the full-length version of tonight's newsletter. Also, while you're here, don't forget to grab your free pass. Come out and join me as a guest in the trade room this week. If you're not a member here at School of Trade, grab your free pass in the upper left-hand corner. Also, don't forget to join the mailing list. Lower left-hand corner, all I need is your name and your email address, and I'll shoot you an email every evening when the nightly newsletter is ready. Below the video tonight, you'll see a spot to download all the charts you see me using in tonight's video. How easy is that? Click there to download all the charts in today's video. And of course, as I always remind you, you're going to learn more with me in 1 week on my free trial than you will anywhere else on the interwebs. Join the trial membership on the right-hand side of the blog. And remember, I'm always here to help you guys out. Hit me up on the live support button on the right-hand side of the website. We also have a live support button on our homepage as well if you guys have any questions along the way. Grab your free pass, register for the newsletter mailing list, download those charts, and I'll see you guys inside of our free trial. But first, we get a busy week ahead of us here. We got a lot of news out, not only tomorrow, but later on this week. It is the first week of the month, which means we're looking at non-farm payrolls on Friday. So pretty much all eyes and ears are going to be focused on that employment number. Friday morning at 8:30. You're going to start hearing more and more discussion about that as we get into Wednesday and Thursday. But pretty much that's the big headline news of this week. We're also going to hear from tonight. We have the Royal Bank of Australia. We're going to hear from Great Britain and their meeting minutes and announcement on Thursday. Lots of important stuff happening this week. It's definitely setting up to be another great week of learning and earning here with us on the Trade Room. Hope you guys had a great week, by the way. I really missed you. Feels good to be back here. New month, new week. Let's check those news events for tomorrow. Nothing here happening before midnight, right? Nothing here tonight before midnight, but shortly after midnight, though, Tuesday, August the 2nd, we got the RBA announcement at 12:30 a.m., the PMI construction from our friends in Great Britain, and then we go right into the U.S. session tomorrow at 8:30 a.m. We have the personal incomes and outlays. That should do it tomorrow for the major news. Again, kicking it right off at 12:30 a.m. Eastern Time in Australia, if you're in the Asian session. And then, of course, don't forget, in the London session tomorrow, we have the 4:30 a.m. news, and then the U.S. session with me in the trade room tomorrow at 8:30 a.m. for the personal income and outlays. We'll talk more about the news tomorrow night. Tomorrow night, we do hear from the Bank of Japan. We'll hear from China. That'll be late tomorrow night. We'll talk more about that in tomorrow night's newsletter. Most important thing, though, if you're trading London, heads up for 4:30. If you're with me tomorrow in the trade room, 8:30 a.m. personal income. Relatively quiet session tomorrow. I'm going to start ramping up Wednesday, Thursday, and of course, the big non-farm payroll number coming out on Friday. Always a very big news event. We'll start talking about more about that as the week progresses. Great to be back here. As you can see, mark that calendar for tomorrow and be ready for that news on the schedule. Let's jump right in. Crude, S&P, gold, and maybe just a little bit about the euro here before we finish up tonight. Crude is bearish and trading sideways after the sellers reached their double down target today. The trend is clearly bearish, so we will be looking for selling opportunities until the buyers can prove otherwise tomorrow. But the most important clue this evening is that we've reached the target for the sellers, which tells us to avoid selling low and wait for traps and failures up at resistance levels overhead for the most reliable selling opportunities tomorrow. The buyers need to be careful here, waiting for a higher high and a successful breakout pullback before anybody tries calling a reversal. This is one of those great examples where it's clearly a bear market. They reach their double down target. Well, obviously the measured move target is the first objective, but after we push through that measured move, you'll notice here how we double bottom at that double down and we start to go sideways. We clearly have reached a market objective. At a market objective, this is where it's easy to lose sight on what's happening right now. The trend is clearly bearish. This is not a bull market. So we're definitely not interested in being a buyer. But a lot of times as new traders, I know I made this mistake when I was a new trader many years ago, was that, well, it appears we're done going lower, so now I guess I'll be a buyer. Boy, if only it was that easy. The odds are significantly stacked against the buyers until they can get a nice strong break higher, hold a pullback, right? Get through some of these resistance areas, use some of those resistance areas as support, and then we can start looking at this as a bull market. This is a classic example of a bear market that has reached an objective. We expect to see profit taking. We also expect to see some bargain hunting from the bulls, but we still know the odds are stacked in the favor of those sellers. Let's play that game. What if price goes higher? What if price goes lower? As this price goes higher here, and we do expect it to go higher. In fact, I think everybody is probably on the same page on this one. We hope it goes higher. Buyers and sellers are likely hoping, unless of course you're still holding a position down to that triple measured move tomorrow. Bottom line though is, as the price goes higher, buyers really need to see a strong break higher, hold that pullback. If they can get a pullback held, then the buyers can start to look up towards those areas of resistance overhead. Got to see a nice strong move though, right? And what we talk about in our trade room is we're always looking for separation. We're looking to get that nice strong push higher, get a good amount of separation above the moving average, then hold that pullback. That's when this market, right, becomes a bullish market, but not until it can hold that pullback. Okay, that's the most important thing for the buyers right now. Looking for that new higher high, hold that pullback. Then of course our targets are going to be up at the next area of resistance above, right? So as this price goes higher, break out, pull back, right, up to targets overhead. Now, even up to that 40.83, up to 41, even we'll call this area right here, this becomes the battle zone. This is where the buyers have to defend against the sellers. Let's say scenario one, we do break out, we do hold the pullback, and we can get ourselves up, right, up into that battle zone, we'll call it. We have to assume with this bearish market, there are going to be sellers that are drooling over a chance to sell that high. So at this point now, buyers have to hold again, looking for that breakout pullback. And really at this point now, it's this move right here, right? This is the one that you really want to wait for if you're a bull, because trying to be a buyer now trying to be a buyer on a pullback into that battle zone is going to be very, very challenging for the bulls. So get to it on the breakout pullback, get to it on the breakout pullback. Just be careful trying to buy into this battle zone overhead. Buyers, you guys know what you're looking for tomorrow. For the sell side, sellers are pretty much looking for the buyers to fail. Ideally, the buyers are going to look to buy that pullback. Sellers are looking for them to fail and sell back down. Again, we have to assume that all moves higher will be sold, right? Look at the bear market. Look left. We don't want to zoom in too closely on this. Looking left, we can easily see this is a bear market, so we assume that every time price gets above any of these prior areas of resistance, there will be long-term sellers looking to get that move back down to that big round number at 40. So sellers, you guys are staying patient, waiting for buyer failure. Again, buyer failure off that new higher high, breakout pullback fails, selling back down to that low. The target for the sellers right now at the short term is to revisit that 39.88, right? That'll be the target for the sellers. And of course, if they can get it going even lower, 39.65 and 39.36 for that triple measured move. Now, heads up on that triple measured move. Right now, the measured move is being calculated from that swing right there. So that's what's giving us that triple measured move. If we happen to get above, we'll call it 40.34, 40.35. If we happen to get above that pullback area, now that triple measured move will have to be adjusted. So just keep that in mind for tomorrow, right? So if we do end up getting a new higher high, pulling back, and then failing, that measured move now will be adjusted a little bit higher. We'll, of course, do that tomorrow with all of our students in the trade room. So sellers looking for buyer failure on the pullback. Sellers also keep an eye on, right? Keep an eye on that battle zone overhead. Again, I wouldn't be surprised whatsoever if these buyers get a nice strong push, mostly on profit taking, and then strong buyers come in, hold the pullback, right? That's their opportunity. We talked about that earlier. Next up, to make sure I sell this most reliable, I want to get price back below it and then hold that pullback back down. So assume here now, assume the buyers, if I can draw this correctly, you know, I've been off for a week here in the afternoon with you guys, right? Assume the buyers hold the pullback. Watch out for that battle zone to come in play. I'm not too keen on just selling the buyer failure here, right? Because you would assume at that point it's a bull market, and of course the bears have to take this thing back over again. So the buyer failure on that pullback, not going to be the most reliable trade short, because at that point it will be in the hands of the bulls. Look for those sellers to hold their pullback, and that's the one you want to be looking for on the way back down. All right, guys? So either buyer failure, right? Buyer failure right away. That, of course, target right back at that low. If the buyers can hold this, though, and if they can get this thing moving higher, get it back below that moving average, right? And then you're off to the races right back down again. Remember, if it does hold that pullback, it becomes a bull market. So you want to wait for it to turn back around to a bear market again to finish off that big move lower. We're talking short-term opportunities for the buyers on the way up to that battle zone, long-term opportunities for the sellers to go right back down. Bears own the day, bulls may own the hour, if you will. Now, as this price goes lower, this is really where it gets tough tomorrow for really both sides. As the price goes lower, I cannot be a buyer on this. Obviously, that would be an option here, right? So if we do get this price going lower, okay, which again would not be as desirable as price going higher right now, but assume it goes lower, right? Breakout pullback, that will be the option for the bears. For the bulls, though, a failure going to be pretty aggressive, right? Because it's a bear market at this time. So bulls really got to be careful until we can actually see this market actually hold a pullback. Even if they can't get it, the most reliable trade for those buyers will still be after it holds that pullback. Remember, buying a bull market, selling a bear market, right? We don't have the ability to say price can't keep going lower and therefore I should be a buyer. So just be careful trying to be a buyer here with seller failure at that low. Sellers looking for that breakout pullback. Make sure you get and stay below that 39.88. And then, of course, we're going down to targets at 39.65 and 39.36. Remember, it's always going to be a little bit hairy at that low. So really get a strong break, get that moving average to come back down, keep below the 88, keep below the moving average. That'll give you the odds on your side, at least something that's more reliable. What you don't want to do is get caught here trying to sell into that double down support, right? Because that will oftentimes result in a little trap low for the move back up. And then again, I talked about earlier, right? Be careful being a buyer there until we get that strong pullback to hold, right? And then you can feel free to be a buyer on the opposite side. Watch out for that trap low. It's always a little bit hairy at the lows. Look out for that triple measured move to be recalculated. And again, we know where the sellers want this. They definitely want this price up so we can get this thing back down. You should have a small window there for buyers on the way back up. It heads up there on the way back down off 41. We'll be looking at this chart live in real time tomorrow. And we'll see you guys in the trade room at 8 a.m. Eastern time. On to the S&P. Bearish, and trading inside a wedge as it struggles to complete the double down target this evening. The first thing that stands out from today's session is that the bears weren't able to really get any targets reached, with both the measured move and the double down targets still left outstanding. The second big clue we see is that the best moves happen after a trap high, which is telling us the sellers are interested, just not interested selling at the low. Surprise, surprise. With those two important clues, we know to keep looking for selling opportunities with traps and failures